Hey, thanks for checking out the video. We will want to start this video by entering in the link that was sent to you or the link that's in the bottom of the description. And that's where you're going to start. And this is Credit Strong. It is an FDIC insured bank. If you scroll down to the bottom, you will see that it is Austin Capital Bank, member of the FDIC. So this is a legitimate bank. It's a federal bank. So with that in mind, this is the single most powerful credit building product in the market. And I'm excited to share this with you guys because this is one of the single most powerful things anyone can do if they're trying to rebuild their credit or restart their credit or just strengthen their credit. Because a lot of times after you've had credit issues, it's incredibly hard to know what is the right type of credit to open, how much credit should you open. And there's a lot of offers with credit card companies that are just not good credit cards. High annual fees, low limits, high interest rates, high late fees, just across the board. Not companies you want to deal with. And the idea you should keep in the back of your mind whenever you reestablish credit history, specifically for any type of account, but even a heavier focus on the credit cards, is when it comes to credit card accounts, otherwise known as revolving accounts, the longer you have those open, the better it is for your credit. You want to have the idea in the back of your head that any account that you open up now, your goal should be that that account is open 10 years into the future. And if you can stack that with 1, 2, 3, 4, 5, or 6 revolving accounts that don't have annual fees, and you keep those 6 open for at least 10 years, that is one of the strongest ways that you can lay a foundation for your credit. Keep that in mind. And with that in mind, I will jump into these products. The first one we're going to talk about, you're going to click on products. You're going to drop down to install/CS Max. This is an installment account. Now that's completely different from a credit card. Installment accounts are for a fixed term, and an installment account is good to have when you are wanting to prepare your credit and you don't have any installment accounts on there. If you don't have any car loans or any leases, and you want to eventually get to the point where you want to be able to buy a car or lease a car, then having an installment account and installment activity is incredibly powerful, because when you go in for a car loan, they will be pulling a auto version of a credit score, which favors heavily people that have installment accounts with a payment history. Keep in mind one important thing. Whenever they pull your credit, there's limitations to how much data they can get from you, meaning they can't access your bank account for security reasons. They can't check how much money you have in the bank. They can't check the IRS, how much money you earn. The only thing they can check is how have you managed your debts. That's why this is a really powerful product. You're guaranteed approval. And now let me walk you through this CS Max account. So you have a couple options. It's a monthly payment. It does require a monthly payment. You have to make sure that you're not going to struggle to make this payment. If you think you're going to struggle to make the payment, don't even bother. Wait until you're in a better position. There are options for 28, 38, and 48. I don't really like those options, and I'll explain to you why in a second. But if you scroll down here to CS Max, this is my favorite product. For $49 a month, and I'll show you the exact breakdown of that $49 in a second. It's not all an expense. You commit for 60 months, which is 5 years, and you will then have a $2,500 installment account reported to your personal credit. Now, if you pay $99 a month, you'll have a $5,000 installment account reported to your credit. If you pay $199 a month, you have $10,000 installment account. Now, any one is better than none. $2,500 is good, $5,000 is better, $10,000 is even better. Now, when should you get the $10,000? If you're somebody who wants to buy a $100,000 car in the future, it's better to have a $10,000 installment account versus $2,500. It's 4 times the size. That will just help improve your chances of getting approved. So click over here to more details. I'm going to show you how these things are broken down. When you go to CS Max 49, here's the deal. And I'm going to zoom in here. Out of the $49, look at the first payment. $13.69 is interest. So that's actually what your cost is. It's costing you $13.69 a month for this account. And when you get down to month 12, it comes down to $11.51. So it's only costing you about $10 a month after the first year. The difference from the 49 to that is the principal savings. In the first month, it's $35.31. In the 12th month, it's $37.49. That means out of that $49, $35.31 in the first month is going into a savings account with this FDIC insured bank. That's your money. Whenever you close this account, that money gets sent to you. Ideally, you keep the account open for the 5 years, and let me show you why. When you look at the full amortization table, And I'll zoom in here. When you go down to month 30, this account is only costing you $7.63 a month. When you get to month 40, it's costing you $5.31 a month. So the longer you're in it, the cheaper it costs you, the more you're building savings, and the stronger your credit looks, because you now have an open and active account that's been open for 4 years or 4.5 years. It's much better than opening it for a year and a half and then closing it. So if you could, keep it open for the full 5. Really, really strong. So now we'll go back to, so let's take a look at the CS Max 99. That one, it does cost more. Instead of the 13, it's actually costing you $29.16 a month. And as it goes down, it also decreases. So if you want to go down to here, it will cost you about $21 a month. In month 34, it'll cost you $14 a month. The difference goes into savings. So this is something that you just need to figure out what makes the most sense for you. CS Max 99, let's just go through it quickly. This one, so to get the $10,000 installment account, they're charging you about $60 a month. When you get down to month 12, it's down to about $50. So you're paying a lot more for that, but it's worth it if you want to get a higher financing, the higher amount of a finance for a vehicle. Any one of these is better than nothing. And let me show you why I don't like these install accounts, as I mentioned earlier. So you can get one for $28 a month, $38 a month, or $48 a month. The problem with these is that it only reports as a $1,000 installment account, $1,000, $1,010 at $1,100 and $1,000. So it's not a high amount of credit extended to you. If you want to build a lot of credit, the $2,500 is probably the minimum of what you're going to want to do. So that covers the installment accounts. My recommendation is at least CS Max 49. If you could do the 99 and go for it. If you feel like doing the 199 because you want to purchase something, a higher dollar amount, financing it, you can't go wrong with that. It's incredibly powerful to have these accounts. So moving on to these accounts, let's go back now into the revolving option. A lot of times if you don't have credit, or if you've had credit issues and you want to come back and apply for credit, the problem you're going to run into is no one is going to approve you, or you're getting offers from cards that are just really not good cards. High annual fees, high interest rates, high late payments, and really low limits, not the kind of cards you want to deal with. So when you're starting back out, if you have no credit or if you're rebuilding credit, you'll guaranteed to get approved for this revolve account. All you have to do is sign up and pay $99 for the first year. For that $99, you get a $1,000 line of credit, revolving line of credit reported to your credit. It can increase up to $2,500. So this is a really good way to add one revolving account, one installment account, and after 3, 4, 5, 6 months, now your credit score is going to be significantly better, and it'll open up the door for you to build into that next phase of getting more credit, better credit. And these are guaranteed approvals. So these are the most powerful accounts you can deal with right now. Now there's a way, if you want to spend more, you can get a higher credit limit. If you want to spend $199, you'll get $2,500. It can bump up to $5,000. If you want to spend $249 a year, you can get a $5,000 revolving credit. Any one is better than nothing. It just depends on how fast you want to build your credit up to a point where you can get approved for higher limits. If it's something that's really important, then it may make sense to spend the more money and get the higher limits. Because as soon as one bank sees that you're already approved for $5,000, then the idea of them approving you for less than that is probably not likely. They always try to match or go higher than what somebody has already extended to you. So that's the powerful way to go ahead and extend the credit and increase it. Any one of these is great. It's easy to sign up. They'll send you a lot of emails, but these are probably the single most powerful products, as I mentioned, when it comes to building credit. When you think of your credit cards, think of it as like a lane on a highway, and you want to just build a nice highway that you would like to ride on. And the same thing is with a bank. You have nice 4 or 5 lanes. Every card is considered a lane. The longer it's open, the longer the road, the more comfortable people will feel wanting to take a ride with you because they see your history. They know you. Late payments are considered like road bumps or potholes. And the bigger the limit, the wider the road. And the longer it's been open, the more people will want to ride with you for a long time. So you ideally want to use that highway analogy. In a perfect world, you'll get yourself up to a point where you've got anywhere from 6 to 10 open and active accounts, and you keep them open. At least 4 to 5 revolving. If you can do 6, that's great. Here's an incredible statistic that will shock you. Fair Isaac, the company that created the FICO scores, they looked at all of the 800 credit scores and wanted to figure out what are the characteristics of it. So they took a sampling to see what is the average number of open and active revolving accounts on the average 800 credit score. That number was 11. So that's what it comes down to, is 11 accounts. You don't need to have 11, but you also don't want to just have one or two. So use that as a frame of mind. Thank you guys so much for watching this and also embarking on the process of rebuilding your credit. If you have any questions, there'll definitely be a place for you to do it. Please be sure to use the link that was sent to you or the link that's in the description. Thank you so much for watching. Let me know if you have any questions. Thanks.